Hey, what's up guys? John here. Wall Street could be forced to liquidate 574,000 single-family homes throughout the nation. Now, many people may say that's not a lot of homes, John. Well, considering the fact that there's only 750,000 houses actively for sale, it's quite a lot of homes. It's roughly 80% of all home inventory. Now, what I believe could happen next is shocking. In fact, I think this bill could actually pass. And if this does happen, I think a lot of investors are not ready for this. I don't think so. Now look at what's going on. The first version of this bill came out last week. They're already on the second version. They're pushing aggressively to make this actually happen. Now if this does happen, I believe that hedge funds are actually getting a gift. I believe this is a major win for Wall Street and not for Main Street, and not from the perspective that people are anticipating. Because if you look at things historically, over the last 50 years, when have you ever seen any bill, any law benefit Main Street more than Wall Street? I can't name one. Look at the bailouts with 2008, all the bank bailouts. Look at all of the last couple of years. Everything was in favor of Wall Street. Nothing in favor of Main Street. Now look at what's going on here. Look at the chain of events that are unfolding, and you tell me, where do you see this going? Because MetLife Insurance is saying that Wall Street and hedge funds are going to own 40% of all single-family homes nationwide. Why? Well, because there's a secret loophole in this bill that nobody is talking about. And I think that when you look at the chain of events coming, you could see a situation where Wall Street can cash out at the top, crash a market, this housing market, then come back in and scoop up all these properties for pennies on the dollar. I'm going to break it down for you to show you what's going on. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's really going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-off, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, Yahoo Finance. This came out about 5 days ago. No, Wall Street investors haven't bought 44% of homes this year. Now they go on to say they're buying a lot of homes, and in some markets it might be a little bit more, and many markets might be less. But when you look at what's going on here, they've already pulled out. Investors have already pulled out of the housing market. And look at this chart here. Investors are pulling back from the housing market, buying half as many homes as a year ago. Look at this chart here from Redfin. You can see they're already, greatly retreating. And why would they do that? Well, when interest rates are as high as they are, there's way better options for the amount of yield that they can get on their capital. They're buying properties, or they were buying properties at all-time highs as insurance and taxes are rising, and now they're starting to see more and more issues around collecting rent. At those former evaluations, because rents are softening. And so they're already wanting to pull some risk off the table here, right? And when you look at how many homes they own, 574,000 nationwide is what they have listed, and you look at what's going on in the housing market already, the housing market, coincidentally, has now seen a surge in inventory walking into the winter, which you never see. You never see more homes for sale in November as you do in July, right? Why? It's because the market is changing. And so this bill could in fact be such a great gift for them. So look at this. The everyday American, the typical American, has over 70% of their net worth in their primary residence. So many people are anticipating and calculating their net worth based on their home value. When their home value falls, so does their net worth, right? Well, when you look at what's going on right now, insurance is going through the roof everywhere. Texas, Louisiana, a lot of places where people are buying and selling properties. Atlanta, Florida, all these different areas, right? Florida right here. Troubles in the property market during the past 3 years have led to many homeowners facing massive rate increases or losing coverage. But now it's 60% more expensive to buy a home than to rent. And so you have to ask yourself, if you're seeing a market where home inventory is starting to pick up and it's 6% more expensive to buy than it is to rent, and insurance and taxes are rising, and inflation is a challenge for many Americans, what are you going to have? You're going to start to see a race to the bottom. And many of these investors have a lot more capital and a lot more wiggle room to go out there and be competitive. This new law would force them to sell off 10% of their portfolio every single year. Not to list 10% of their portfolio, to actually complete the sale. Right? So what does that mean? These investors are going to be much more aggressive to attract a buyer, meaning that they're likely going to undercut a lot of these homes presently on the market. Now, many people might say that's a good thing for home buyers, and it could be. But here's something not to take into consideration. So Not a profit center for Wall Street, lawmakers take on greedy hedge funds accused of gobbling up homes and fueling the affordable housing crisis. Are corporate landlords to blame? Look at this first. So they go on to say the problem is rapidly growing cities across the country. Corporate Americans are buying 20% of homes in 21% of homes in Atlanta, 19% of homes in Memphis, 18% in Birmingham. We already have a housing shortage that is driving up home prices and rent. If we allow unchecked corporate purchases of houses, especially if they're rented out, it could make the goal of home ownership even more difficult for families. Look at what's going on here. Look at what's going on. If, in fact, homeowners are barely holding on right now as everything becomes more and more expensive in the world, the job market continues to soften up, and you see a situation where these investors would have to pay, look at this, a $10,000 per home for corporate owners. So if they own 75 single-family homes, right, 75 single-family homes, they would have to pay $10,000 per home, right, as an annual fee. It doesn't matter, in my opinion, to pay $10,000 per annual fee if they're forced to liquidate at the height of the market, they crash the housing market, and they come in and say, sure, I'll pay $800 a month on this property that, maybe I sold for $550,000 or $500,000 or $400,000, and I'll come back and I'll buy it for $200 or $225 or $250, right? They're going to reduce their cost basis. They want to take this market here, tight inventory, almost no available homes for sale, and then no available buyers to buy them, and then crash prices, and then at that time, come back in and scoop up everything for pennies on the dollar, and then pay an $800 annual fee. And then who knows if this actually will go, and it will be a $800 or monthly fee, $800 monthly, $10,000 annual fee. This would actually happen because there may be some way around this, right? We could see top comment, LOL, this won't stop them. $10K per home when you have billions to spend is a drop in the hat. That's exactly it, right? That's exactly it. And you look at the neighborhoods that are greatly impacted. The End Hedge Fund Control of America's Act seeks to put an end to a harmful practice of hedge funds buying up single-family homes, bans hedge funds from owning single-family homes, and requires them to sell at least 10% of their total number of single-family homes they currently own to families per year for over a 10-year period, subject hedge funds to a $50,000 per single-family home tax per year. So this is the original one, $50,000. Now the new one, which came out today, is $10,000, right? So this may actually change. It might be $5,000, might be $3,000, right? But what I think is happening is we're going to walk into a wave of home inventory. And if you have a situation where 70% of all Americans have their entire net worth tied into a unrealistic value of their single-family home, and that value crashes, but yet tax and insurance continue to rise, that's going to be a big problem. And at the same time, if you're a hedge fund, what would you do? You'd probably want to unload as much of your inventory as possible now at the height of the market. Because if you look at what's going on right now, you have $2 trillion in corporate debt that has to get refinanced next year. You're going to see more layoffs. And over the next 5 to 7 years, you're going to see technological innovation. You're going to start to see a lot of deflationary pressures due to robotics and technology. What is that likely going to do? Push more people out of work. That's likely going to reduce overall purchasing power for home buyers, and that's also going to reduce the value of these assets. So if you're a institutional hedge fund and you're sitting on 50,000 homes, you're probably going to want to liquidate as many of those as possible right now, and then scoop in when the real panic sets in, maybe late 2024, early 2025, start to scoop in and start acquiring more of these properties. So whenever they put out these headlines, and people, they always get really excited by saying that Wall Street investors are, they're the enemy. And, in many cases, some people would agree that they are. But when you look at it, Wall Street owns Main Street. That's always been the case. Wall Street is not here. Main Street doesn't regulate Wall Street. It's the other way around. Wall Street is the one that's issuing all the, all the big donations to all the politicians. I mean, they're the ones that are issuing these fat checks. These people are the ones that are controlling everything, not the other way around. So when you see a situation, a bill coming in saying, Main Street is now going to beat Wall Street. When? When did that happen? When has that happened historically? I don't remember a time. If someone can correct me down in the comments section, I would love it. And I will pin your comment at the top comment to educate myself and other people. If you could name a time where Main Street stepped in and saved the day, I would love to see that. drop below. Let's have a conversation. And I do think we're going to see potentially this thing pass. And if it does, we're going to start seeing a lot more home inventory. We're going to start seeing a lot of pressure put on home sellers. And we're going to start seeing prices come down in a big way. And if you're thinking about investing in real estate, this could be a great opportunity to start picking up deals right around the same time as Wall Street. And if you have any issues with your credit, maybe late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any other negative issues on your credit report, book a free strategy session by clicking the link in the description below this video. We'd love to give you a free strategy session and see how we can go about helping you fix your credit. And catch you in the next video.